I'm Taylor Riggs in San Francisco in for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, Micron stock rallies. Cowen turns bullish on the chip maker. We'll head to Las Vegas and hear from Micron CEO and others live. Plus, deepfake ban. Facebook takes action against videos modified by artificial intelligence to look real. But does the social network go far enough? And Electric Avenue, Tesla CEO Elon Musk cuts a rug as the company delivers its first customer cars from the Shanghai factory. Shares touch record highs. But to start, the annual CES conference is currently underway in Las Vegas. CES is gathering the biggest names in the business of consumer technologies. It served as the proving ground for innovators and breakthrough technologies for 50 years. Now, Uber is working on a flying car with Hyundai, aiming to develop a network of air taxis to take the concept of ride sharing to a higher level. Bloomberg spoke earlier with Uber's head of Elevate, Eric Allison, who gave us more details about the project.
We like to say that this is closer than you think. And at Uber, we've been working on Elevate for about 3 years. And we've been developing a network, an ecosystem of people who are aligned with our vision of bringing ride sharing from the ground into the sky. And so we're aiming to actually launch our aerial ride-sharing network in 2023, just 3 years from now. And we have a network of now 8 partners. Hyundai's our 8th partner that is joining in working on this together, and we're pretty excited about being able to do it.
What regulatory hurdles do you expect to meet on the way?
As you know, aviation is a highly regulated industry, and so we have to look at regulatory considerations at the local level and at the national level. And so we have teams that are working on all of these aspects of it. And a good example of this is actually at the national level, the regulator is the FAA. And so they have regulations on airspace and vehicles. And so we've been actually working with the FAA on trying to identify what the key blockers are in terms of how do you bring these vehicles to market, and then identify what kind of solutions that we can work with industry consensus bodies on to develop the solutions ahead of time before the companies working on the vehicles actually run into those issues.
Eric, have you guys thought about what this will cost for the consumers? Because it's certainly exciting to see the technology, but when it comes to actually using it, what about things like pricing for the individual user?
Yeah, so we do a lot of really deep analysis on this. We build the big simulations of how these networks work, including how do you connect the ground side to the air side of the network. And so we think that we can actually launch this type of a service in an economically reasonable way at about Uber Black pricing in terms of a per seat mile type of a pricing system. And then over a couple of years of being able to really develop the efficiencies of using the power of our network and the demand that we can generate, we think we can get to Uber X-like pricing within a couple of years in terms of the per seat mile basis. So Uber X-like pricing on a per seat basis.
Eric, how is this different from Uber Copter, which is already actually launched?
Yeah, so we actually launched Uber Copter as a way to start to understand how to build those operational efficiencies right now before the vehicles are ready. So we're actually developing all the technology behind the scenes to be able to do that real-time matching of riders from different cars into the vehicles, in this case the helicopters in downtown Manhattan, and so we can drive operational efficiencies that way. So Uber Copter you could almost think of as kind of our beta version of Uber Air that we'll be launching in 2023.
Eric, for Uber as a public company, obviously it has to think about the future, but it also has to think about where it's spending its money. Can you just give us a sense on the kind of investment you've had to make in this project?
Well, so what we've endeavored to do is actually really focus on this being a partnership-driven approach. And so that's why we've developed this ecosystem of partners who are, the vehicle companies are the ones who are really going to be investing to bring these vehicles to market. And what we're able to do is leverage the core technology that we have in a way that allows us to build the connectivity behind the scenes and then bring those vehicles into the platform.
That was Eric Allison, head of Uber's Elevate. Now, chip-related stocks rallied against the broader market amid growing optimism for the sector as 2020 takes hold. And that followed a number of announcements from the CES event. And that includes Micron. And standing by from Las Vegas is Micron CEO Sanjay Mehrotra. Great to have you on the program. Before I get into some of the specific announcements you made, talk to me broadly about where you think we are within the glut of some of the chip memory prices.
So with respect to the chip, DRAM as well as flash, we have said that 2020 should be a good year for the industry. First quarter of calendar 2020 is typically seasonally slower quarter in terms of demand, but in our industry, because of the capex reductions, the supply growth has been slower than the demand growth. Is the end market applications such as 5G, AI, IoT, all of these are driving explosion in data, and Micron products are used to store that data and to process that data. So applications are growing. Micron is expanding its portfolio of solutions. We are well positioned to address the opportunities in 2020. We are excitedly looking forward to 2020. 2019, there was some excess supply in the industry, yet Micron produced excellent results in terms of overall financial performance. We are looking forward to 2020 here with strong demand drivers as well as strong execution on the part of Micron with respect to its technology and product portfolio.
And Sanjay, a few analysts on the street, namely some from Cowen, upgrading the stock, saying that NAND should become profitable as new smartphone launches help to tighten that supply up. Does that also coincide with your thinking as you look to tighter supply in 2020?
Yes, I think as we said, that the supply growth is less than demand growth, and the demand, it continues to increase given the end market applications such as cloud, such as smartphones, autonomous vehicles, increasingly driver autonomous features in the driver assisted vehicles as well. All of these are driving growth in demand. Just look at 5G smartphones. They are actually driving higher average capacity of DRAM than 4G phones. There have been phones announced with DRAM content as high as 12 gigabyte in them. Even $300 kind of 5G phones have 6 gigabyte of DRAM in them, whereas in 4G phones, average was somewhere between 3 to 4 gigabyte. And in 2020, a couple of 100 million of 5G smartphones are expected to be sold. So 5G is going to be a strong driver of DRAM content growth as well as flash content growth, given the fast speed and connectivity that it provides, and explosion of data and AI-driven features, as well as really immersive experiences that 5G phones will be able to provide to you. They drive greater demand for data, which bodes well for Micron's business. In fact, we have exciting products that we, over the year, have in 2019 announced that really suit very well for the smartphone applications. But let me tell you, it's not just about smartphone. When you look at cloud and servers, they are requiring, AI-driven applications are requiring more and more memory storage in cloud and server and data center applications as well. And there are many other end market applications requiring.
And talk to me more about that DRAM and memory chip that you talked about today, improving memory by up to 85%. How do you see that changing the data center space?
So what we announced today is DDR5. It is the next generation interface for memory in server and compute applications. Yes, it provides 85% faster performance than the previous generation of memory interfaces in DRAMs. It provides high reliability of data storage, and this is perfectly suited memory for the future server and data center applications. This memory, Micron announced today, is built in industry-leading technology node of 1Z nanometer. So this shows Micron's product leadership capabilities. In fact, in mobile applications, we already have been shipping our 1Z LPDDR solutions for quite some time now, and today we announced our industry-leading 1Z node with DDR5 memory suitable for data center, enterprise, and cloud applications.
You just had a resolution of the Huawei licensing agreements. Are you satisfied with those?
with respect to Huawei, we mentioned in our earnings call in December that we have received the licenses that we had applied for. We are thankful to the US administration for reviewing and approving our applications. Of course, it will take some time as these applications have been granted for us to get our new products qualified into the new platforms of Huawei. And of course, we continue to monitor the situation in terms of any other changes that may occur with respect to US-China trade relations. But we hope that this will continue to improve and go in the direction where there is indeed is level playing field, respect for intellectual property, and enterprises in the two countries to really leverage their innovation capabilities and do business freely based on free market economy-based principles.
Micron CEO Sanjay Mehrotra, thank you for joining us. And coming up, the battle against deepfakes. Facebook draws a line ahead of the 2020 election, but will it be enough? That's next. This is Bloomberg. So was Facebook the reason Donald Trump won the 2016 presidential election? According to one Facebook exec, the answer is yes. In a Facebook post, Andrew Bosworth, he's a former head of Facebook's advertising team, said that, quote, he didn't get elected because of Russia or misinformation or Cambridge Analytica. He got elected because he ran the single best digital ad campaign I've ever seen from any advertiser, period. Bosworth added that while, quote, desperately wanting to pull any lever at my disposal to avoid the same result, he can't endorse that action because, quote, we will become what we fear. Bosworth's post was made public by Facebook after it was leaked to the New York Times on Tuesday. Now, speaking of Facebook and the elections, the social network says it's tightening its policy to combat the emerging threat of deepfake videos on its network ahead of this year's presidential vote. But the new rules won't totally eradicate deepfakes off of Facebook. Videos manipulated for purposes of parody or satire will not be banned. Now, when it comes to the political realm, well, that's a little bit of a gray area. So thankfully, I have to discuss all of this. Las Vegas is Jean-Claude Goldenstein. He's Creo founder, Creo Point, and then he helps businesses fight against misleading content on social media. And with me in studio, it is Bloomberg Technology's Kurt Wagner, who has been covering Facebook for us. So Kurt, what do we know sort of about these new policies today, about the deepfake videos, and then what happens if a politician uses them?
Yeah, so Facebook is treating deepfakes in the way that it treats other types of I guess, bad or negative content. So like hate speech, for example. This is the type of thing that anyone on the network, including politicians, are not allowed to share, or Facebook would take it down. So they're saying the same thing about deepfakes here. While politicians are not fact-checked, they can't share deepfake videos as ads or as regular content, or it would be removed, but it gets a little more complicated. Facebook, like Twitter, has a specific policy around newsworthiness. And so if they deem something to be super newsworthy, they might leave it up even if it violates the policy. So it does get a little complicated. So
Jean-Claude, let me bring you in then on this. Does this go far enough, in your opinion, now for Facebook coming out and saying that they will be removing some of the deepfake videos?
No, like every time with Facebook, it's not going far enough. It's always too little, too late. I'm sitting here in Las Vegas a year ago. We saw a fake doctored video of a Tesla crash, supposedly crash, and that went around the world in minutes. What happens in Las Vegas doesn't stay in Las Vegas.
Kurt, I wanted to bring you back in because we were talking about the stance on political ads, where Facebook took a very hands-off approach. Does this appear to be more of a hands-on approach by Facebook, them sort of acknowledging that they needed to do a little bit more, at least with regards to the dissemination of misinformation of deepfake videos ahead of that election?
Well, it's tough because deepfakes are complicated in the sense that these are videos that are doctored using, artificial intelligence or really intense technology. So Facebook got in trouble a few months ago. You may remember when there was a video of Nancy Pelosi that was shared that showed her appearing to slur her speech. That was not considered a deepfake because it was really just a regular video. The words she said were the words she said. it was just slowed down to make her look and perhaps appear inebriated or something like that. And so that's where it gets really complicated. That was a damaging video to Speaker Pelosi, but it didn't actually constitute as being, quote, deepfake. And so as a result, it didn't get removed. What I do think that did, though, is it at least raise the issue very clearly with Facebook that this is going to be something that happens a lot in 2016, and that, or excuse me, in 2020,
right.
Gosh, and that they need to be prepared with some kind of policy to deal with it.
Jean-Claude, what is your take on Facebook's stance on political ads, taking a hands-off approach, and then what appears to be, at least in removing the deepfake videos, this policy, a bit more of a hands-on approach?
It's just not defensible. What Facebook is doing is just not defensible. And we've been talking about politics, but a lot of the deepfakes or the doctored videos impact brand. We just listened on Bloomberg to all the efforts that are going on right now with Uber and their autonomous vehicles and the trust that's going to be needed by the public to go in this autonomous cars is going to be a lot more than what we have right now. So people don't trust AI, they don't trust AVs, and they certainly don't trust Facebook. So something has to happen, and it's probably going to be a combination of new startup, new AI startups, or a combination of AI plus human intelligence, probably working for brands that are most impacted. Imagine if there's a fake video of Bernard Arnault or Michael Bloomberg. There's plenty of deep fakes or simply doctored video, like Kurt just said about Nancy Pelosi, where you could just slow someone down a little bit and create a lot of damage to a brand. A Tesla exploding in the Shanghai garage got the Tesla stock to drop 3% last April, and one can expect to see more of those fake videos of high brand equity type brands, as well as their business leaders and their celebrity endorsers. There's been a lot of fake videos with porn. Ivanka Trump is speaking right now. There's been tens of thousands of views of her in a deepfake porn. And it's going to go on like this and impact all kinds of personalities and brands, not just politicians. And since the brands are what make Facebook business model work, with efforts towards brand safety, one can expect the future to be a little better, but I'm very pessimistic short term because the AI folks who used to talk, or even Mark Zuckerberg, who has been pledging to Congress last April 2018, that there's going to be a lot of AI investment in removing this harmful content. That's not happening. There's a $10 million deepfake challenge, which is basically what Facebook makes in a rainy morning. And a few dozens of experts are not going to solve a problem. There's hundreds of millions of videos being watched on Facebook every day.
Yeah, Jean-Claude Goldenstein of Creo Point and Bloomberg's Kurt Wagner, thank you both for joining. And coming up, much more from CES, and Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at Quick Take on Twitter. This is Bloomberg. Electric vehicles are a big focus at CES 2020. Ford's new battery-powered crossover has so far been a great success with pre-orders. Bloomberg spoke earlier with Ford Chief Technology Officer Ken Washington about the company's push into EVs.
We're living at a time when technology is changing so quickly, you have to try different things. And we've been through a period where we've tried a few things, and now we've got a pretty clear strategy. We are committed to putting smart vehicles in a smart world that's increasingly connected and smart. And that's what we're doing and showing here at CES this year. We're bringing our smartest vehicle ever and showing it off on our stand here at CES in Las Vegas. The Ford Mach-E, Mustang Mach-E, it's got great features in terms of connecting to the smart world, and it's got self-driving advanced driver assist technologies in it. And we're also showing off how the world can be thought about in a way with a simulation table that we call the City Insight Studio. So these two working together is all part of our plan to bring smart vehicles into a smart world. And we're pretty excited about it, and there's a lot more to come.
Ken, how do you stimulate demand for EVs? Right now, they account for less than 2% of the market, and they'll still apparently be less than 5% by 2025 unless somebody does something to stimulate demand. How do you at Ford plan to do that?
Well, we're going to do that starting with the Mach-E by bringing great vehicles that people are going to love, that they can afford, and that they can integrate into their digital life. And that's why it was really important to us when we designed the Mustang Mach-E that we brought features into the vehicle that they're going to want to use. And it's going to have like a smartphone-like feature. Our next generation sync, for example, is an example of how we're bringing technology into the electric vehicle market that will stimulate people to want to buy these vehicles. And once you drive and ride in a vehicle like a Mustang Mach-E, we are confident people are going to love it. And that's why it was really important to us to bring the vehicle here to CES so people can see the vehicle and see the kind of technology that we're putting into it. When we think an inflection point is coming with electric vehicles, and the Mustang Mach-E is the beginning of that inflection, we believe.
Do you think you're doing a good job monetizing the data that is coming off Ford cars right now? Do you think you own that data, and do you think you could make more of it?
It's absolutely important that we understand that the data is owned by our customers, and we have the privilege of using that data to turn it into value. That's why it was very important to us that we built our electrical architecture and designed the system in the vehicle so that we can treat that data with the care that it deserves, and we can turn it into value. The next-gen sync platform is an important part of our strategy to actually do what you said, which is to take that data and turn it into value. Not just value for Ford, but value also for our customers, giving them new experiences like better voice recognition. We've got artificial intelligence capabilities so that as you use the vehicle, it can actually improve and do more things for you, because we're using that data to teach the AI algorithms how to serve you, the customer, better.
The biggest question for you guys has got to be, when do we get an F-150 EV?
Well, we have already announced that we have that in our cycle plan. That's in our strategy, in our business plan. And we're going to be bringing that to the market in the next few years.
That was Ken Washington, Ford CTO. And still ahead, Tesla revs up production in China, heralding what could be the dawn of real competition in the world's largest EV market. We'll have all the details later this hour. This is Bloomberg. This is Bloomberg Technology Global Link, where we join Bloomberg Daybreak Australia to bring you the latest in global tech news. I'm Taylor Riggs in San Francisco with Kathleen Hayes in New York and Heidi Stroud-Watts in Sydney. Let's take a look at those top global tech stories of the day. Heidi.
Taylor, Tencent and its partners are seeking a $3.4 billion loan to fund their purchase of Universal Music Group. The consortium agreed in December to buy a 10% stake in Universal Music from French media company Vivendi. Bank of America, Bank of China, HSBC, Industrial and Commercial Bank of China, as well as Morgan Stanley, are expected to provide the funding. The results of 5G auctions in Taiwan are, quote, blowing away expectations. That's according to New Street Research. Bids have so far exceeded $3.3 billion, showing robust demand for the new technology in a country where consumers are the biggest subscribers of data in Asia. The final spectrum fee in Taiwan is expected to reach nearly $4 billion. And a new problem for TikTok when it comes to politicians, only this time it's dealing with impersonators. Unlike Facebook and Twitter, the viral video app doesn't have a robust identity verification system to certify accounts. And that's led to multiple accounts impersonating the likes of President Donald Trump and the Indian Prime Minister Narendra Modi. Some of those accounts have thousands of followers. This discovery comes as the app continues to face national security scrutiny from US lawmakers. And those are the top global tech stories that we're watching. Taylor.
Well, moving on over to Samsung's preliminary fourth quarter earnings are expected soon. Analysts estimate a fifth consecutive year-over-year profit decline for the world's second largest chip maker. Still, the company's shares have surged 44% over the past year as the market continues to look for concrete signs of a turnaround in the global memory chip industry. Joining us now, it is Bloomberg Intelligence senior tech analyst Anand Srinivasan. Anand, what are you looking for in these earnings?
Look, one of the things, obviously, Samsung dominates the memory industry, both on the DRAM memory as well as on NAND memory, which is used for storage. We're going to, the expectations for that particular segment of the market are very, very robust. People want to see a steadier picture and recovery in 2020. And any color that they can give us with respect to how demand is trending for both the DRAM and NAND memory components are going to be very useful. Separately, from the consumption angle, the handset business, where Samsung also is a market leader, the picture in 2019 was much better than initially feared. We're going to see some of that strength continue in 2020, particularly 5G, particularly in China. So we're going to see some more trends, and Samsung is expected to lead in both of those segments. So from a color perspective, maybe seasonally 1Q is not that strong from a demand perspective, but we want to see trends move in that direction.
Well, we certainly know that Samsung plans to spend a lot of money on expanding its memory, and it's spreading that investment around.
Absolutely. Look, I mean, from a CapEx perspective, Samsung is far and away in the lead with respect to technology advancements when compared to, say, somebody like a Micron, which is a stateside manufacturer of memory, and it wants to keep that lead, right? So the more it invests in that, the faster it can produce higher-end chips in high volume, which means that those have a lower cost profile and higher price profile, expanding gross margins for them. So that's one of the tricks that you want to have up your sleeve in memory.
Anand, when we take a look at competitors in the handset market like Apple, they're really banking on a big 5G upgrade cycle for those mobile devices to boost them in 2020. Any indication that Samsung as well is sort of banking on 5G and a big phone upgrade cycle to help boost demand?
Yeah, so look, I mean, 5G is clearly the trend that's going to dominate 2020, both particularly in Asia, right? So we want to see some of that trends be particularly strong. And Samsung has a dominant position in Korea, where 5G has already been launched, has a strong share position in China alongside Huawei. And so it's going to benefit from that. And it's also the Android leader. So those all are positive trends for 5G. One of the things that we want to see is that 5G adoption widen both stateside as well as in Asia.
Anand, Samsung analysts are predicting a fifth year-on-year profit decline. Now, just because their profits are declining doesn't mean that they're not growing and expanding, et cetera. Can anything turn that around?
So we want to see memory turn the corner, right? So we want to see memory demand exceed supply, which we think will happen in the second half of 2020. And that will push Samsung's profits in a much more robust way than has been the case historically. Display is going through a little bit of a tough period right now from a TV perspective, but memory is the key fulcrum around which Samsung profits will pivot.
Anand Srinivasan, Bloomberg Intelligence, thank you for joining us. Much more still ahead, so stick with us. This is Bloomberg. Electric vehicle maker Fisker is showing off its Ocean electric SUV at CES for the first time. It boasts a performance of 0 to 60 miles an hour in 2.9 seconds. The model will cost about $37,500 before the available tax credit, or you can lease it for $370 a month. The lease terms come with no long-term contracts. Fisker wants to offer insurance options and service appointments through their mobile app. The Ocean expects to go into production at the end of next year, with delivery slated for 2022. Joining me is head of Fisker, Henrik Fisker. The company wants to generate, of course, a majority of its profits from software and services over the long term. So, Fisker, Henrik, thank you for joining me. Talk to me now about this Ocean SUV and mostly the pricing as you aim to undercut Tesla, for example.
Well, thank you, Taylor. One of the big things for me is I've always designed luxury cars for over $100,000, and embarking on this venture to really get affordable mobility on the street, we had to completely rethink the automotive segment. First, the business model. How do we get cars directly from our factory to consumers without all the middlemen? So we have done that via the app. We have developed our own app. That's the first step. Second step, I believe that there's a consolidation happening in the car industry around electric vehicles. Everybody needs partners because nobody at this moment produces millions of electric vehicles. So we have lined up some amazing partners, some very big conglomerates across the world to get lower cost for all the electrical components. So combine that with this very good purchasing power, and the other hand, a completely changed business model. We have been able to put a vehicle together that we can put on the market more attractive than a similar gasoline car, and I think we might be the first to do that.
And you've talked about some of the shifting strategies over time. You were originally looking at a hybrid plug-in. Now you have switched really to a full battery. Why the change?
Well, I think today we have now reached a point where batteries are good enough to give us the 250 to 300 mile range that most people would like to have. And also battery pricing is coming down. Specifically, we have a deal with a very big group where between several brands we share the purchasing power to go out and get batteries at reasonable prices. So we're showing today not just a show car, but actually a fully functional, fully drivable prototype made out of steel with a fully certified, finished, developed battery pack. And what we are showing today is this actually possible by collaboration, by changing the business model to actually put a vehicle to the market for $37,500, which looks probably like a much more expensive luxury SUV, and you wouldn't expect this type of pricing. But that's because we don't have brick and mortar. We don't have a whole bunch of middlemen that has to take a cut before it reaches the consumer. We go straight from our app. We actually have conversations with our customers through the app, so we own what is probably the most expensive real estate in the world, is to actually be on your phone every moment that you are awake. We have access to you, you have access to us. We interchange messages, the latest photos. We can ask you what type of vehicle color you would like.
Right.
We've already started taking orders, and through our fintech platform, we can actually see where the orders are coming from.
You also have a goal of bringing solid-state batteries. Experts say we are years away from that. Where are you in bringing solid-state batteries?
So solid-state batteries are not going to be in the initial vehicle. We are still developing them. We are actually building about 20 batteries a week at our lab, but it's still on lab scale. We have to get them up to high volume production. This will still probably take a couple of years. But the point is we now have hardware where at any point in time we can put in batteries, we can add in software to this vehicle. We are planning through our flexible lease model to actually own this vehicle fleet financed by Credit Suisse and others, and make sure that we own this fleet means that in 5 or 6 or 7 years from now, we keep putting these vehicles back out to the market, so we have a reoccurring revenue, but we also have hardware where we can keep applying the latest software or even other hardware like new battery technologies because we own the fleet.
And you're also talking about a car or an EV model that comes from all recycled materials. Is it really all recycled materials?
Well, not everything, but interior is almost everything. We have all the carpets is made from recycled materials from the ocean, like plastic bottles, fishing nets. We have actually some suede, eco suede, that's made from recycled t-shirts. We use rubber from tire manufacturing, so the waste that goes in there, we're using that as a scuff plate in the back and the trunk. So we are trying to make this vehicle as sustainable as possible, because I think this is where we need to move in the world. We need to take the vehicle, that product, we got to bring that into where we want to go in the future with a clean world. We can't keep on producing vehicles the way we do it today if we want them to be part of our society, if we want to keep private mobility, which I think we all love in the end of the day. It's great that we have car sharing and ride sharing and all that, but in the end of the day, people like their own cars, which means we got to make them more sustainable, more clean, so they can fit into our society.
Well, thank you to Henrik Fisker, Chairman and CEO of Fisker. And sticking with EVs, Tesla CEO Elon Musk had something to celebrate. Tesla has kicked off production in China. Musk was at a Tesla plant outside Shanghai. The company handed over the first China-made Model 3 sedans to the public, but it's a different model EV that Musk is excited about.
Actually, probably even more people prefer an SUV than a sedan. And I think ultimately Model Y will have more demand than probably all of the other cars of Tesla combined.
For more, I want to bring in Bloomberg's Dan Hull, who covers Tesla. First, start with those Model 3s going finally to the public, not just to employees in China. This is a big deal.
Yeah, I mean, Tesla is the only car maker that has a plant in China without a JV. So that sets it apart from others. It's a wholly owned Tesla facility. They got a lot of financing from Chinese banks. And the speed of the construction, I think, really astounded people. A year ago, this was just kind of like a muddy field, and now they're having this big party. A lot of Chinese government officials were there. Musk was dancing, and they're, sort of celebrating the handover of the first cars.
I want to come and take a look at a chart here that I'm showing inside my terminal, because China is, as we know, the largest market for EVs. They have some of the most demand. And this really has been the bull and the bear thesis on the stock, is can they actually capture that Chinese market? Is this the first step and really what could set Tesla apart?
Yeah, I mean, in the middle of this trade war, having local production helps to lower the cost. And right now, Tesla is assembling the cars in China. As more and more of the supply chain is localized, full-on production will happen, and then they will be able to lower the cost for consumers even more. So right now, Tesla cars are still kind of high compared to locally made cars like BYD, but they'll be able to lower the price, and then that will give them, they'll be at more cost parity.
And then in the soundbite that we heard in the beginning, he was talking about how the Model Y demand, he thinks, will really eclipse all of the other models combined. When do we expect then the Model Y crossover?
Yeah, so he said that before. He said that on Tesla's last earnings call. I think what was news to me is that they're going to begin Model Y production in Shanghai as well, and they haven't begun Model Y production here in Fremont yet. So it sounds like they're going to be sort of launch the Model Y in parallel on two continents, and the Y is the lower cost SUV. Tesla had a lot of challenges launching the Model X. I think they've learned a lot of lessons from that, and the Y probably will be big. I mean, most people in the world now want SUVs as opposed to sedans.
The biggest issue, as we remember, was the production hell that he described over here in California. How did they avoid that in China? This appeared to be a seamless rollout.
I mean, it's hard to say. We haven't heard much from the company about what they did, but I think that Tesla sort of has reinvented the wheel many times, and they learn painfully often the challenges of manufacturing, and then they kind of power their way through them. And I think that whatever they learned from getting the Model 3 up and running in Fremont, they took with them to China and then improved on it further.
I'm asking a little bit of a far-out question here, but we were speaking with the Micron CEO at the top of the hour. We remember Micron had gone into China, and then they accused the Chinese of stealing their technology and pushing them out. Is there a risk that Tesla goes into China, China then figures out their technology and kicks Tesla out?
I mean, I guess that's always a risk. I would be surprised if Tesla went into China not being aware of those risks. And I think that the IP that they have is pretty solid, but they've also open sourced a lot of their patents. And I think it would be very hard for someone to actually just copy them outright.
Finally, I want to come and take a look at another chart that I'm showing inside my terminal here at GTV Go. Frankly, none of the positive good news or the share price has done anything to squash some of the bears that continue to come out. You still have 15 sell ratings on the company, more than the buys, more than the holds. Does any of this news sort of calm down some of the bear chatter that you hear?
I mean, you've seen analyst notes this week, like including Brian Johnson of Barclays. I think his note was bears in hibernation. But a lot of analysts still think that the company is overvalued, and what they want to see is sustained profitability. So Tesla surprised everybody with this third quarter profit. Are they going to have a fourth quarter profit? What is their guidance for the year? Are they going to do a capital raise? Are they going to pay off all their debt? I mean, there's still a lot of questions about Tesla as a business, current stock price aside.
Bloomberg's Dana Hull, thank you for joining. And still ahead, Lenovo flaunts the first ever foldable PC with arguably a steep price tag. We'll look at what's behind the cost and who is in the market next. This is Bloomberg. Lenovo is putting its faith in the future of foldable screens. The Chinese tech company showed off its foldable ThinkPad computer at CES, hoping to instill confidence in a category that has had some technological setbacks. The evolved ThinkPad model has no crease in the display when it's fully unfolded, unlike the Samsung Galaxy Fold, and is compatible with a keyboard attachment that mounts on the top of the screen. The ThinkPad X1 Fold goes on sale mid-year at $2,500. For more, let's bring in Matt Zielinski. He's North American president of Lenovo. Matt, great to have you here. Talk to me about that price point. It feels like it's priced like a computer, but the attachable keyboard makes it feel like a tablet. Is this a tablet or a computer?
Well, it's a good question. Actually, a lot of the genesis of this foldable device was the customer research that we have done. And it basically said that you have a lot of customers that own an e-reader, that own a tablet, a PC, and a smartphone. They were looking for a way to consolidate all of those experiences. And so that really was part of the birth of the X1 Fold. And truly, from a price point standpoint, when you marry all those devices together, it adds up beyond that. And certainly, in terms of early adoption, look, OLED displays are still quite expensive. There's a lot of things in that will naturally, over time, depreciate and cost just a little bit. So, yeah, it might seem a little bit steep in the beginning, but we still think it's a bargain when you combine all those devices together. And I think over time, there's certainly room for that to come down.
And at that price point, what are you forecasting in terms of unit sales?
Well, that's a really good question. I think it's still a little bit early, but it will certainly be in the tens of thousands of units, even as early as launch. We already have a lot of pent-up customer demand, a lot of excitement. It surely is a halo product. So really, what's important to us is that we get the experience right out of the chute, and then I think sales will naturally follow.
You've had a prototype of a 13-inch tablet, I believe, a year or two ago. The hardware has changed a lot since then. What have you done to improve the hardware?
Well, look, we've been at this for about 35 years, and there's a lot of things that we can do to drive innovation. And we really believe that gone are the days of judging a good product and innovation by speeds and feeds. It's much more about the experience that it delivers and if it has a positive impact on people's lives and ultimately bettering humanity. So really, we're less about the ingredients of the hardware and more so now focused on just the full experience that a new device delivers.
We're having a lot of conversations about the chip makers today. It was notable that you chose Intel. Some of our reporting, though, shows that it's a little bit slower than some of the others at a similar price point. Why Intel?
Why Intel? Look, Intel did a good job co-designing this with us, but to be very frank, they're very close partners, but we have multiple partners in the CPU space, including AMD and other ARM vendors. So for this particular architecture and the way that we had built it, Intel made the most sense at the time. Doesn't mean it will be that way forever. At the end of the day, it really is a way that we want to design a device that people want to buy with choice. And if choice merits itself in the future, then that's certainly a potential. But we're proud to have both vendors broadly positioned throughout an entire portfolio.
Were you impacted at all by the trade fight, and how do you see rhetoric, at least of a bit of a resolution, improving your business prospects?
Well, sure. The fact is we're showing 9 straight quarters of revenue growth. We're the biggest PC maker on the planet. In North America, we were the fastest PC business, the top 5 in 2018. We're the fastest growing again in 2019. Look, the fact is we do business in 180 markets around the world. We're very proud of our heritage and our culture, but the fact is we're very, very diverse on a global basis. And over 2/3 of our revenue actually comes from outside of China. We're well positioned for any of the dynamics that the trade war potentially brings to us. It's something we follow very, very closely, but we really are in a position where we can manage this very, very effectively.
Are you able to give us a number on the headwinds that are now tailwinds, given the resolution of at least phase one?
Well, no, look, we honestly don't look at it from a market standpoint or headwinds relative to trade wars. I would just argue, look, we're the biggest PC maker on the planet. The market's on a global basis flat to slightly up, slightly down, depending on region. But for us in North America, we've showcased over 400 or 500 basis points of share growth over the last 2 years, and the fact is we're still number 3 from a PC standpoint. So regardless of headwinds or tailwinds, our product strategy is playing out beautifully, where we believe we have significant room to grow. And if you look at the Microsoft Windows refresh, we still think there's tens of millions of users out there that has still not migrated to Windows 10. So there's a lot of different things in the background that we think will continue to fuel the PC business, least of which is the fact that we have a lot of room to grow in the biggest market in the world, that is North America.
Well, I'm glad that you brought that up, because at least in the smartphone market, we talk about 2020 being a big year for a big upgrade cycle. Do you expect a similar upgrade cycle in the PC market in 2020?
We do. Again, our data suggests that we still have tens of millions of users that have not yet upgraded. That number is bigger than 20 million according to our latest collection of data. So, is the majority of the refresh cycle behind us? Potentially, but there's still a lot of units out there for conversion, and we're going to chase them as hard as we can.
Thank you to Matt Zielinski, Lenovo North American President. And that does it for this edition of Bloomberg Technology. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at Quick Take on Twitter. This is Bloomberg.